Hey everyone, Couch Investor back on our earnings video for today. So AMD reported their quarterly earnings a double beat, but the stock is currently down 5%. So what exactly has happened? Because well, when you hear a double beat, so that means top and bottom line, the expectations were met and then some. So why is the stock down? Is it because again the market doesn't understand what's going on? Like we've seen with SoFi, for example, triple beat, stock is down, but then a day after, stock is up quite nicely. But no, with AMD actually, yes, there was a double beat, but there is another aspect that we have to take into consideration, and that's guidance. And guidance fell below expectations, and that's enough for the market to punish a stock in this environment. Now, it was not that bad of a guidance. Yes, it's weaker than expected, but as you will see, this report is okay. Now, for those of you that have been following the semiconductor industry, we've gotten a lot of hints in recent days, if not weeks, especially TSMC, Intel, on you name it. So let's start with a couple of comments here from the CEO and CFO. We delivered strong revenue and earnings growth driven by demand for Ryzen 7000 series PC processors and record server processor sales. Our data center business is on a significant growth trajectory based on the strength of our EPYC CPU portfolio and the ramp of Instinct MI300 accelerator shipments to support multiple deployments with hyperscale enterprise and AI customers. As for the CFO, we executed well in the third quarter. We delivered year-over-year growth in revenue, gross margin, and earnings per share. In the fourth quarter, we expect to see strong growth in data center and continued momentum in client, partially offset by lower sales in gaming segment and additional softening of demand in embedded markets, basically what we've seen already with Intel. Now, the expectations for fiscal year 23 and the 2 years following were as follows. So for sales for fiscal year 2023, the market is expecting this to decrease 3.3% compared to fiscal year 2022, but then in fiscal year 2024, reaccelerate close to 20%, then in fiscal year 2025, another 13.4%. With regards to EPS, big 21% drop in fiscal year 2023, but then a reacceleration of 50% in 24 and another 27.16% in fiscal year 2025. Currently, AMD has a forward PE of 29.5 times. Of course, that would change a bit now that they reported earnings, but just so you know, this was the number. And year to date, it's still up just over 50%. Of course, right now being down 4 to 5%, I mean, it's still quite a good return. Now, before we jump into that report, again, thank you everyone that has been subscribing. We've reached 30,000 subscribers 2 months before the end of the year, so definitely exceeded my goal. So again, thank you very much for all the support. And if you would like to support me even further, first of all, if you're new here, maybe hit that thumbs up button, subscribe if you have not. It's going to be a scary evening tonight. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, let's have a look at the major overview here. I like to look here at the non-GAAP, so the numbers are a bit clearer. Of course, you can always go and pause the screen if you want to look at the GAAP numbers. Now, non-GAAP revenue quarter over quarter were also up 8%, so better than the 4% growth year over year. Gross profit is up 11% quarter over quarter, up 7% year over year. As for gross margin, they did promise us margin expansion in the second half of the year. So yes, it's up 1 percentage point quarter over quarter and year over year. As for operating expenses, that is also increasing, up 6% quarter over quarter and 12% year over year. Operating income is flat on the year-over-year basis, but up 19% quarter over quarter. Operating margin down, actually, 1% year over year, but up 2 percentage points quarter over quarter. As for net income, we're up quite a lot quarter over quarter. Earnings per share, same thing there, 21% growth quarter over quarter, and both of them, net income and EPS, are up 4% year over year. Now, with regards to the different segments, so data center net revenue came in at $1.59 billion. That's flat year over year, but it's up 21% quarter over quarter. As for operating income, it's up 108% quarter over quarter, but down significantly year over year. Of course, there has been some weakness there. As for the client, we're up quite a lot quarter over quarter. We've seen that improvement as well with Intel. With regards to Intel, I'd like to add a little bit more towards the end of this video. It's also up 42% here, year over year. As for operating income, it's now, well, last year, same quarter, it was a loss of $26 million. We're now up 638% year over year and up 303% quarter over quarter. As for gaming, that segment has not been performing well, so it's down 8% year over year and 5% quarter over quarter. They did introduce their best ever new gaming laptop, so maybe that might help, but hey, it's not a pretty cheap device. As for operating income, that's better than last year. It's up 46% year over year, but down 8% quarter over quarter. And embedded is down year over year and quarter over quarter. Of course, that segment increased quite a lot when it first got introduced here because of the acquisitions. But now we're seeing a little slowdown there, but no surprises. Intel has already hinted towards that weakness. And so the disappointment was basically this: revenue around $6.1 billion. I believe the expectations were more towards $6.3, $6.4 billion, so a little miss there. Gross margin, another small improvement there, around 51.5%. So yes, that margin expansion is happening, but definitely not something out of this world. Now, just want to say that despite the weakness that we're seeing in the embedded segment, it is a segment that is very much profitable for them. I mean, operating margin here 49%, so not too bad, especially if you compare it for the gaming segment, for example. That's just 14%, client 10%, and data center is now down to 19%. Previously, same quarter last year, it was at 31%. So, I mean, seeing that 49% operating margin for the embedded one is still quite nice. Now, with regards to Intel, I just wanted to add here a couple of comments from an analyst at Northland Capital Markets. He said he's confident in the company's execution and expects Intel to gain share in the x86 microprocessors next year. We believe system in package will fundamentally change the semiconductor industry over time. Fabless and IP companies will sell chiplets rather than chips and IP respectively. He also added that Taiwan Semiconductor and Intel will dominate the system foundry market, and as such, outsource semiconductor assembly and test, or OSATs, vendors of system in package, or SIP, will be disintermediated. He of course explains that this evolution will take time to happen, but evidence is mounting that it occurs, and as such, Intel is better positioned than widely recognized. And I agree. I think after the recent earnings report, it's pretty clear that they're betting a lot on their foundry business becoming a huge success, and despite not getting any names for the big clients, I mean, they keep getting more and more clients for the foundry business, which is going to be extremely lucrative for them for the long-term future. So I just wanted to add that with regards to Intel. And so last thing here is the graph. Of course, now after hours, stock is back down just under $94, $95, should I say, which again could be a support. We've been there a couple of times in recent weeks. It was holding up quite okay, but of course now with earnings, with that weakish guidance, maybe we'll drop a bit more towards the $85 mark or so. I mean, if you can get AMD a bit cheaper, why not? But currently it was already in no man's land under the 20, 50 and 200-day moving average. RSI still neutral. Remains to be seen what happens also tomorrow, FOMC meeting, that will definitely shake up the market. So that will be it for this video. Of course, do share your thoughts down in the comments below. What did you think about AMD's report, especially the guidance? Did it disappoint you enough to wait for a larger dip to buy, or is this 4 to 5% dip enough for you? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.